All right, traders, welcome to Trading Open for today, Thursday, February 16th. I hope you all are having a spectacular time in the markets as we're taking out all-time new highs. It's the best time to be trading. We'll see what our capital markets bring us today with strength recently, not only in the broad market, but especially in our biotech and pharmaceutical sectors. Really done quite the bounce lately. So we'll see if those continue on up to take out new highs in today's markets, along with our other highly volatile charts like gap continuations and the rest of it. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold by watching this screen, not to make actual trades. We make no profitability or performance claims. We don't do live real money trading. We all use a sim account or paper trading demo account for safety. So good to keep things safe. A reminder, look for, especially good after a run up to near whole number or other likely resistance area, look for bearish candle reversals, whether it's your classics like shooting stars or bearish engulfing, or simply top shadows, meaning shadows that are telling us kind of like little bear cups in the making. So if you got wicks or shadows, lines at the top, that's not good. So we want to use that as a early reversal signal in our current markets. Let's go ahead and work through today's charts and see where things are headed. First of all, our market profile. If you look at our S&P, you can see we're still in an uptrend, though we have divergence with the NASDAQ 100 pre-market indicator. The QMI is slightly bearish, going just 4 points. It barely hit my criteria of 4306 or 5306 to 5302, so it's kind of bearish divergence. So I'm going to proceed with caution today. Best charts in the world that I can find for you are as follows. For the sell side, we've got a breakdown in AIG, American International, selling down from 64 whole number to 61 whole number, right? That's slightly further than that, but you get the drift. There's the 61. There's the 64. The technical support's down at 60.4 to be exact, but 61-ish is support for this guy, 64 is resistance. Likely it'll keep selling down, so we prefer a short, but we're also ready for a bounce in case it pivots to the upside. Long charts are the right way to focus in a uptrending market. Interesting divergence in our VIX ETNs, and those clues are especially important. If you want to be a professional trader, you have to know what the market internals are telling you. So what's the VIX, the trend, the tick, as well as the trend line of the S&P and the Dow and the NASDAQ and so forth. UVXY should be down with the spiders up. They should not be correlated, but they are. So that is an interesting divergence to what we expect as traders, and that's a clue. That's a tradable opportunity to say, hey, the UVXY may be leading, kind of a lead indicator that if it's starting to show strength, that means that the broad market may be ready to sell off or may drop, despite the fact that the market chart itself is up. This is kind of like the future chart, meaning here's the XIV. This is kind of like the future chart. This goes up when the market goes up. The fact that XIV has been down with the spiders, that has not escaped the notice of good, savvy, professional street traders, and it shouldn't escape our notice either. And it didn't. I caught it for you guys. So that's a divergence signal, and that's important. If the S&P is up and the UVXY is also up, something wonky is going on. So be prepared for anything is what I'm saying, as always. We're going to be ready for moves up or down. UVXY and XIV, I've got those triggers for you there, both longs and shorts. Bristol Myers, a crowd favorite, going from 53 and change up to 55, a 2-point run yesterday, as our biotech, pharmaceutical, healthcare sectors all been on quite the run up. So we're currently parked here under the previous day's high, 55.6, kind of a conservative long. I'll likely tighten that in on the open, so stay tuned for that. Next up, Kate is the biggest gapper I can find out there for you, gapping up to just under the 22 whole number resistance, and there's those trusted whole number support resistance areas, right? You could see 20 was the open range support line, ran all the way up to 22. Most likely it'll do what I published in Stocks and Commodities about a mean reversion or a pullback to around half, but either way we're ready for it. If it finds support here and keeps rallying on up, we're ready for that too. So we'll catch this one. Kate moving up nicely. Next up, MOH, Molina Healthcare, not looking too healthy, but it is starting to bounce. All right, that's what this one is, Molina Healthcare. I told you it'd likely be a run over the 49 whole number, and it is. It's now up to 49.25. We don't want to touch it until it breaks the 50, but still on the radar here for a potential pivot. This is a bullish engulfment type of a pattern. You're starting to see this wrapped around the previous candles, and on the aggregate, it's kind of a reversal play. So we'll see if we do get a little lift up here, or if it just stalls here and drops. Either way, we're ready for that one. So MOH, the best gap chart out there, the strongest point range gapper from 60 whole number all the way down to 49 whole number, which is providing immediate trading support. So we'll see if that 49 support holds or if it drops back down underneath it, gets back down here in the 48s. The absolute low is 48.30. So anyway, we're ready to see which way this one goes. That's a good chart for day trading. Next up, Valiant Pharmaceuticals, gap up, continuation up. It's a cheapie, but it does have a minor gap in its favor. So we like minor gaps like this, and we'll see if it's able to take out new highs in today's markets as well. Next up, EWZ, also the Brazil MCSI ETF. It's a nice run up yesterday from, and again, as I always teach you, whole numbers, actually, the whole numbers right here, 39, that's the support open range, and 40 was the exact resistance area right there. So a whole number, at a whole number support open range and a whole number resistance closing range. And as a good smart trader, you always want to trade right above whole numbers and sell right under whole numbers and make your trade setup within that region. So we'll see if we repeat this and if it runs up to 41 today. And or if it drops and bounces off 40 or chops and goes on down here. Either way, we're ready for EWZ with a 40.6 long trigger and a 39.80 short trigger. Last but not least, we've got Teva with a nice big open range bullish cup run up yesterday. Did really well. We'll see if it continues the madness today or if it chops and drops. Either way, we're ready for that one. I've got an inside range long trigger right here at 36.8. The reason for that is it's right above this high and it's right above that closing value. So that may pull in high frequency trading or algo trades because it's above the C level, OHLC, open, high, low, close, OHLC. If it gets above the C, it may pull in some buyers at least up to the 37 or higher. So for that reason, we'll go long if it hits here. If it drops and chops 35.90, the short trigger, and the reason for that is that's a loss of the whole number support that we saw at 36. And again, do you see with Swiss clockwork-like precision, this thing found support off that bounce at the whole number 36, and it ran all the way from there up to whole number at 37. The whole numbers are magic, maybe not magic, but they're good professional pivot points. You don't need calculated pivot points. That's a bunch of hooey. All you need is a professional price action traders, things like whole numbers, cut breakouts, gap continuations, and price elasticity to understand how to price project out your trigger points correctly. So anyway, that's the analysis on that, and we'll see where that heads. Also for the swing trading crowd out there, I picked a couple of ones that aren't quite good enough for a day trade, but Cisco is a gap up. I mean, it may be okay for a day trade, but typically things like Cisco and Intel don't run very far because they're heavily traded with very high volume, and so they're kind of more scalpers for day trades, which we don't like. We like big 40, 50 cent runs, and you're not likely to get that out of a Cisco or an Intel or Microsoft. But it is a nice bullish cup continuation, 33.7. 33.7 would be the long trigger in that. And last but not least, day traders' favorite from back in the day, network appliances also gapping up. Because of this compressed range yesterday, that makes it unappealing for me to want to day trade it today. But if it takes out 41.80, again, 30 cents above the high is kind of the standard default, which is usually pretty good. So 41.8 would be the earliest I'd go long in NTAP if it continues on up. For now, it may do the either chop and bounce here off support or may drop to the midpoint and just do one of these. So we stay away from this unless it takes out 41.80 to the upside. Let's see, hey Damon, a question about a chart YY. Yeah, that's a great chart. Yeah, that's a good one. We're slightly, not quite over 15,000 shares consistently, but it's reasonably good. So volume, not quite what I like, but it's close, and it's a great chart pattern, so thanks. Yeah, we'll put that on the radar for today up in the breakout session. See, the volume bars aren't really consistently over 15,000 shares, and that's my minimum criteria because that gives us tighter spreads and better order execution. And that's really important too, because that can really eat up your account if you're trading things under 15,000. And look at the spread here. And what's this? 80 cents by 40 cents by the whole number. These guys are getting screwed on their order fills, right? One guy paid 48 for it. Another guy paid 48.46 for it. Someone else at 47.85. Someone else at 47.50. So pre-market volume is really thin, and so they're getting really bad fills pre-market in that. So I'm not going to scroll back to yesterday's tape, but yeah, it's a great chart pattern though. So that would probably be great for a swing trade too, if it wasn't for the fact it's right under 49. So anyway, good charts, and we'll see where things head today. We've got some good setups for our market. If we look at percent gainers, you'll see pharmaceuticals up 5%, right? Valiant and Teva and Bristol Myers all up at least a couple percentage points. So really good strength, underlying strength in that sector. We'll see if there's any others worth a shot as well. We already have Kate. Barrick's not too good. British, too choppy. We already have that one on the watch list. MGM wasn't volatile enough for day trade. That's too thin. It's too choppy. These others also, Teva was okay, but the others aren't. Let's quickly scan through the gappers and see if there's any standouts. And that takes so much pattern recognition, expertise, and depth to get the right list of the right charts. That's what I'm here for, to help you with, is, you know, charts that actually have a shot, and not charts like this. I mean, yeah, Applied Materials is gapping up, but it's a choppy chart, and it'd be tough to make money day trading that chart. So we don't want to trade things like that. That one, on the other hand, is good. So anyway, we've got just a couple of minutes till the bell. Great charts. Thanks to all of you for being here. You know, I appreciate your involvement with the live room, and hopefully it helps you develop good, smart trading approaches that actually work with the strongest charts in our current market. So we've got just about a minute and a half till today's open. Hey, sure thing. And if any of you have charts like Damon had asked about, like YY, you know, great single run open range breakouts that are in our price target and close to the volume target, be sure to ask about them, because I'm happy to pull those up and let you know either why it would be an okay entry or why it would not be, and give you specific triggers for it if it's something that would be of consideration. So the biggest gappers are Molina Healthcare to the downside and Kate to the upside. MOH, keep that 50.3 first long on the radar. 50.8 would be a secondary trigger point. So it's headed up. We'll follow up with that momentarily and see where things head. This is a good day trader. You got to be like a bloodhound, or be able to hone in on the very strongest high potential types of charts that actually make sense and be all over them, right? And you know, we do that. That's what you do. Is there's no room for plain just okay charts, of which the world is full of just okay charts. Here we go. Ding, ding, ding. Markets are open. We'll see where things head today. Current resistance in Molina's at the 50. My long trigger is 50.30. So what I'd like to see actually is a little pullback or a little bit of selling here down to say 49.8, 49.7, and then a run on up over the 50.3. Because it's good to have it tested by sellers versus a straight momentum run. Anyway, to be continued. We'll follow up with that one and see where it goes. Keep an eye on this XIV for potential pivot. 67.80 is the trigger. Let's tighten that up to the 60. 67.60, and again at 67.80. And same thing for our UVXY chart. Let's tighten in our longs to 20.1. And again, 20.3. Now, the first thing you do when the market opens is sort your quote box by percent change to see who's starting to get a little lift. Like AIG, starting to get some buyers here. 61.4 is my long trigger. Keep that on the watch list, right? That makes sense for that chart, right? It's above resistance. So we don't go in yet, but if it takes that trigger out over 61.40, we hit it for a long. Kate's trying to take out new highs. 22.30 is kind of my skeptics long trigger. I don't want to go long right now, nor 22.10. That's likely to chop and be dangerous. So be conservative on a long there because it's already ran so far. Start to see where the initial buying and selling pressure is in the market. Which of these are starting to move soon? That one's starting to head down. Valiant. Got a 1660 short, and I'm going to stay with that. Actually, because of the strength of the downtick, let's tighten that to the 80, and again the 1660. So 1680 on a loss of support right here, and again that's under that closing range. That may pull in new sellers. So 1680 would be the first short. And for experienced traders only, try a pivot over the whole number if it gets back over 17. So 1710. If it climbs up a few pennies here, may be good for a pivot long, and then again later at the 60. Now let's sort our quote box by percent change and see who is most green and who is most red. Network Appliances is headed up. That's one of our swing trading picks. You can use 42.30 cents above the high. 42.30 is a next trigger on this gapper. With that volatility, that's also now worthy of consideration for a day trade. Either 41.6 short, which may well hit if it drops, or again, I'd use 42.30 for a day and swing trading continuation long. So that one's headed up out of the gate. I just want to see who's getting a rush of initial buyers. Where's the institutional trader money flow? It's starting to drop. So again, use a break-even cover stop if you hit the 41.6 short. I'll follow up with that in a minute for you. But first, I want to see who else is running. DVN 45.30 for a long, 44.25 on the short. I like the point range in this from 47 down to 44. It's got 3-point range on a $40 stock with well over 15,000 shares. It's really important you pay close attention to the point range and give preference to those charts that have at least a 1.5, 2, 3 points of range to play with. It makes it a lot easier to get 50 or 80 cents out of a chart that has a 2 or 3 point range than some, cheap $3 stock with a 50-cent trading range, right? That's not good. Want things with good wide ranges that are easy to trade. AIG starting to lift as anticipated. Long call at 61.40 just hit. Put a stop at break even on it. If not in yet, you can hit it again or scale in if you're already in at 61.80. But use a break even exit on that guy. What's our broad market doing? Always smart to keep an eye on that. Heads on up. It's up at previous high resistance. So it may slow down here a bit or even pivot, but we're at resistance. So that's good. That's a bullish sign. We've gotten some initial lift of buyers. An interesting divergence still continues in our VIX ETNs. UVXY is up and XIV is down, despite the fact that the SPY is up. So that's interesting. And tradable. So let's see where these guys had. MOH is a break-even exit at the 50-30. It did do at least a 20-cent run for you, as did the 80. So I would re-enter. Go ahead and sell half now. Put a stop at break-even on the rest. That's 30 cents in the money. Re-enter long if it gets over 50.8. Okay, that did do at least a 20-cent run and then pull back. If not in yet, I would rebuy if it gets over 50.8. But MOH is starting to move up a little, so that's good. See, if you'd entered the first time at 50.8, you'd be selling half once it runs 20 cents in your favor up to the 51, then trailing the stop at break even on the rest. So you'd be cash, or if you're in, use a break even exit on that. So good uptrend. We'll see if MOH continues the strength up. We're getting close to the bullish cup. Sell half now, put a stop at 58 on the balance. We're 2 for 2. As usual. Bullish cup, though, we're getting close to a place where people will be looking to sell at prior resistance, right? Good professional traders know this, so good time to lock in profits. Next longs on this. Actually, I'd play this multiple times today. I'd do a 51.80 on a third, and then 52.60 on the fourth. It took me all of about 8 seconds. A heartbeat or two longer than normal, but I wanted to figure out the best triggers for you guys. So 51.80, likely good tertiary or third entry, and 52.60 would be a fourth entry up here. Now also get ready for rollover shorts if it loses support. Let's use 50.4. as the first short trigger. If this is it and it drops, we can go short under the 50-40. So it's ran out, but if it starts to drop under here, which is like a 4-minute low, that would make sense for the short play. So an aggressive short play, but still that's where I would go short, is under a loss of the 50-cent increment there. Hi, Steve. Thanks for Twilio. Let's take a look at that. No, it's too choppy. I mean, it's moved up, but the overall chart pro, do you see how choppy this whole thing looks in context compared to, say, that one? See the difference? I like things that are in focus, like if you use a magnifying glass or a pair of binoculars or something like that. The Twilio chart, it's a momentum runner to the upside, but when you put it in 2-day context, it doesn't look quite as good simply because it's choppy. It's with this kind of a chop zone pattern, there's no history of buying pressure there, so that's not as good a chart. I like things that have a clear history of either buying or selling. Speaking of which, AIG is doing a rockstar breakout for us, 61.40, also in the money, at least 23 cents. Sell half now, put a stop at break even on the rest. You know the drill. Take profits early and often, gang. We're in from 61.40. That's a nice classic inside range move on a nice, tight, clean, well-defined chart pattern with a clean directional trend. Trail a hard stop at 61.60 on that guy. Rebuy if it gets over 61.80. But now's a good time to take profit. If you're a new trader, sell it all now. And actually, we're right under the 60. So everybody sell it all now. Take profit and run. Next long if it keeps going up over 61.80. But see that kind of a logarithmic curve and bearish upper shadows. Remember, that's our topic of the week, bearish candle reversals. We have a bearish engulfing here, and we have a couple, like almost a tweezer top here with 2 bearish upper shadows. So that's a good time to take profit from the initial breakout long that we got in on the way up. Our work here is done, Grasshopper. Next, network appliances. Now see, that's a good rockstar chart. That thing ran up. Still being kind of a conservative. 42.30 is the long call, 41.60 the short. We'll see if that hits. Molina still heads on up. It's just south of the 51 resistance. And again, like I say, now's a good time to take profit. I would sell it all now personally because it's not taking out new highs. So we're giving it a few minutes. It's in the money for us from 50.3 and again 50.8, but we'd be selling, like I said earlier, at the 50.8 because it's slowing down. 50.4 is the first short. So we go short this guy if it loses 50.4. Next long is up at 51.80. So whichever way it runs from here, a good next set of plays for MOH. And thanks to Damon for the heads up on YY. I have no idea what that company is, but it's banking profit for us to the tune of 40 cents. Ka-ching, another flawless victory. Thanks to Damon for that. That's good. It's still taking a shot at it. It's still worth taking a shot at up at new highs 249.7. So if it continues the madness on up here, but I got you guys long at 48.8. Another win. Sell half now. If you're a new trader, sell it all now because we got over the whole number. We got up 40 cents for you. So take the profit and run. That's a good classic breakout. What you don't do is say, well, it's so early in the breakout run, let me wait a bit because maybe it'll run up, like it did yesterday. The smart thinking is you're 40 cents in the money. Take the profit. You can always rebuy new highs up at 49.7. So my official call is new traders sell it all now to the buyers. Experienced traders sell at least half now and trail a hard stop at what? 49.20 on the balance. If we get under 49.20, sell it all to ensure a minimum 40-cent profit in that trade setup. So good breakout. That's a good example, the difference, say, for example, with the one that Damon had mentioned, it had such a good, strong breakout yesterday, it led to a nice, good, strong breakout today as a pattern day trader. Something like Twilio, on the other hand, would be an epic fail chart because it had a zero trend yesterday, and sure enough, it sold right back down today. So that's why we dodged the bullet, and I said this would be a bad chart to trade, and that was the correct assessment. So see the difference? Previous day is everything, which is why you must have a 2-day fixed chart. So you can disqualify this kind of chart and say, nah, it's a crap chart. I'm not going to make money trading it. And we wouldn't have. This is, well, likely we would have done a short at 33.90, but still, it's a bad chart to trade, whereas the YY chart, much easier to make a winning breakout because of its history. Just like a person you're trying to hire for a job. What's their job history, their resume, their CV? Curricula vitae, if I'm pronouncing it right. We don't say that in America as much, but I like that better than resume. It sounds a little more sophisticated. The CV is my friends from Canada and I don't know if you guys say CV in Canada. I know they do in Great Britain. Anyway, the point is, look at the charts like it's somebody applying for a job. If they have a good, steady job employment history and a good success history of managing projects and budgets and achieving outcomes successfully, then that's likely a good person to hire in the current day, right? Because it runs. But charts and people that are haphazard and sketching the previous day are much less likely to run in the current day. So that correlation is absolutely vital to understand. So the cleaner the channel like this, the better the likelihood that it'll repeat and do more of same today, right? So I got you guys in at 48.8, 80 cents in the money. Boom. Trail a hard stop now at 49.6 on this guy, right? Use the nearest 10-cent increment. There it goes. So sell it all now. Sell all open long YY now. I have no idea what this company is. Kind of an intriguing name. YY Inc. Why ask why? We got in at the 48.8. We sold the 49.6, 80-cent profit. Boom. Epic win. Get in again if it gets over 49.7, which headed that way. So we're almost up there. So maybe a second shot if it gets over 49.7. It's an internet supplier. Okay, thanks. Well, it supplied us with a great profitable breakout. So good call. MOH continues the madness on up to the new highs. I told you guys it would be good. We are 2 for 2. 51.80 is the next long, and the reason for that is because that's above this bullish cup high. So that may attract new buyers above the bull cup if it continues to run up. I got y'all long at 50.3 and 50.8. Continued on up nicely for a nice momentum run up all morning long, which is cool. 51.80 would be the third entry up here. It's around, what, 35, 40 cents above the high. and 52.60 for another one, because who's not to say it's not going to wind its way up here and do one of those. So it may do that, but also be thinking that we're at resistance, so this may well attract new sellers. And so for that reason, we also think about going short, and I've got 50.4. 50.4 is a short trigger. So, but if you're long this thing, let's sell it all now because we are currently at resistance, and that's always a smart place to sell and lock in a profit. We now look for the flip side of a reversal short play if it gets under 50.4. So playing the best charts is what we're all about here. CYY, we sold the exact or near exact top right here during the pullback. Looks like the 49.7 did run up. It's starting to pull back. We'll see if it continues on up or not. That one may be in trouble. We'll see. We'll flag it red for now because it did hit, but it didn't run continuously. So the first one did a nice big, huge run up. The second one, a little in trouble. So we'll see where it goes from here. Network appliances trying to sell down for us here. InTap 42.30. I kept you guys out of reach of the false breakout, which is clever, right? It turns out the exact high was 42.20. I said don't go long till we get over 42.30. So we dodged that bullet. And 41.6, the short, if you hit, that's now 30 cents in the money. So we're flawless on network appliances. Cover out half now, put a cover stop at scratch on the balance. Actually, with that chart, let's take a look. Where would I use? I'd use 41.30. So put a cover stop at 41.30. As you guys go short of 41.60, that's an epic 50-cent win. If you're a new trader, cover it all out now because you're at a whole number at a support line. So new traders, cover it all now. Experienced traders, cover out at least half now and put a cover stop on your short at 41.20 on the balance. Because we're now almost 60 cents in the money. That's a good 50-cent win. I got you guys short of 41.6. We're currently bouncing off the 41. In fact, everybody cover out the short. Let's just take the profit and do it. No reason to go short again unless it loses support later. But our work here is done in the short, right? That's what you look for as a good trader. You look for both the breakout continuations above the false breakout region or the reversals on the short side. And that's what hit for us. We said short of 41.6, cover 41. That's a good 50-cent plus winner for you on the downside. And now, like I say, now I would personally be covering it all out now because we're at support and it's likely to bounce now. In fact, let's put in a bounce trigger because of that assertion. Let's use 41.30. Highly risky because that's inside the trading range, but we cover any open short now, take the profit and run, and flip to long. That's a risky though. I'm telling you, that's a high risk entry. It's not a great odds trade, but it is what it is. It's a bounce off support. So 41.30 would make sense for a bounce long in NetApp. But cover out any open short. I got you guys short of 41.6, ran all the way down to 41. Let's cover. Now flip to long if it gets over 41.30. This is all in the first 20 minutes of the market, where the best trading odds are. UVXY, what a move. Anyone catch that? 57 cents in the money from the first call, 36 cents in the money from the second call. Exclusively here at tradingtheopen.com. Great calls, right? The only one in trouble might be the secondary long in the YY. It's still holding on to life support. UVXY, let's do a tape reading exit on this one, guys. Where would you get out? I got you long at 20.10, which is a classic breakout, a classic Calhoun Cup continuation breakout at a 2-day high. The next long up at 20.30 also skyrockets on up to new highs. How much money could you have made had you taken either of those long calls? Let's do the math. Now, though, that we're getting close to 21, we expect it's going to slow down and stop momentarily. And also, we price project out the open range breakout length from our previous day to the current day, and we've even beat that by a bit. So mission accomplished. New traders, sell it all now. Sell, sell, sell. But why can it continues to run up? Well, because we're at a whole number and we may well stall there. So I want to teach you how to get these consistent patterns in your, trading regimen, your trading plan each morning like a rock star. How much money could you have made had you taken either of those longs? 20.10, 20.30. Anyway, new traders sell it all into the whole number resistance. Experienced traders sell at least half now, and I want you guys to trail a hard stop at 20.9 on the balance. So you lock in a minimum 80-cent profit from the first call and 60 cents from the secondary. It's all good. Now, I personally, if I were long this, I'd be trailing a hard stop at the whole number at 21. So if we lose 21, get out. If I start to see 20.99s, that's a sell. And new traders should be out now. There we go. Sell it all now. Sell all now. If it keeps running on up, well, bully for it. But I'd be selling to the buyers right now, taking the money and running long 1, long 2, sell there exclusively at www.tradingtheopen.com. That's how you day trade the markets. Or good volatile instruments like this, not those cheap penny stocks or those crappy $3 stocks of guys try and post phony, I just made $3,000 and I'm long and that's a bunch of hogwash. What you want to do is paper trade, demo account only, rockstar charts with tight trailing stops like this so you know how to make it. How much money could you have made had you taken this trade? Either of them. I said long 20.10. A second chance, I gave you 20.30, and now it ran all the way to 21, and we stick a fork in it. That guy's done. We're finished. That's how you day trade. XIV, also in the money. 66.40 was my short call. That's a 1-point win, exclusively at Trading the Open. Cover that all out now. Same exact thinking. Although it's not quite at the whole number support, it's close enough. Personally, if I'd gone short 66.40, I would be thrilled to have a 90-cent win in my pocket. I'd bank that profit, cover the short all out right now, right this minute in XIV. A good time to cover the short because we ran significantly down. Now, it may keep dropping. It's not to say we don't want to take another shot at it, but personally, I'd use 65.80 as a secondary short. If it gets under this whole number, 64.80. But just do the math on my calls today. We had maybe one stop and the rest all good wins. And that's what you want to make your bread and butter as a trader at, is figuring out this kind of stuff and making a go of it. 61.40 was the first long. That worked out. I got you guys out. It turned out near the exact pivot at 61.60 and 70. Oh, next long, if it gets over 61.80, that's the second long for AIG. Let's tighten in that short to 61.20. You can also use 60.20, which is a good 2-day short if it hits that later in the day. So we'll retain that one. UVXY, good rock star. And I called the exact top. You got you guys out at 21, right? I said to sell it. I remember distinctly following the tape for you guys and saying, sell it all if it loses at 21. When it was up here, I said, sell it all if it loses 21. We got out there. We got a bearish engulfing. And remember, our learning point, our learning pattern recognition point here at Trading the Open for today is look for bearish candle reversals, either shooting stars, top shadows, or engulfing patterns. We have that. We have a shooting star. We have it as part of a bearish engulfing, and we have a tweezer top or 2 bearish upper shadows. So that's all reasons to get out of the trade where I said to sell it at 21, right? I got too long at 20.10. I got too long at 20.30. I had you sell the 21. Perfect day trading calls. I mean, not perfect. Perfect would have been to sell the 21.09 or something, but within a dime of the exact freaking top, that's world-class day trading, Trading the Open here. And again, this may well run on up to 22 or 23 by the end of the day. I don't know where it's going to go from here, but selling into whole number resistance is always a smart idea. We buy above whole numbers. I keep mentioning this pattern because it's so, I won't say bulletproof, but it's the closest thing to an ATM I found in the stock market. You use 2-day high breakouts and you buy right above the whole numbers. That's why I got you guys long at 20.10 and 20.30, and we sold right at the nearest whole number up here at 20.21. Like getting off a bus or train station. You get off the station at the whole number, lock in a profit, and walk out a winner. And that's how you do it. Yeah, my word, that's the correct way to day trade the markets. Not these stupid $3 micro cap, small float penny stock junk that some of these millennial kids are out there peddling, trying to sell the dream. That doesn't work. What works is things like this that actually have a good trade potential and intelligent, strategic exits at likely resistance areas like whole numbers. So not too shabby. Let's go through and audit the rest of these guys. XIV, I had you go short at 66.40 and cover what turned out to be the exact bottom in that guy. We'll see where that goes from here too. We went short at 66.40 up here, and I had you guys cover at the nearly at 65.45 or 65.50. It was nearly a 90-cent win for you. Starting to pivot as anticipated, so I correctly called near the exact bottom for you in the XIV pivot too. That wasn't a whole number. That was just based on, that was derived based off of the UVXY exit, because that wasn't a whole number, so we sold the 21. So for that reason, we covered the short in XIV down at 65.40 because of that reversal in the UVXY. That's one thing that I'm so pleased to have trained so many tens of thousands of traders at here in my training at Day Trading University and Trade Mastery over the years, is because we look for these patterns that we know repeat. The trick is not to be misled by trading them with cheap, choppy charts. You want charts like this that actually have good juice. They got good 50-cent trade potential. So you don't want to be trying to trade cheap stocks. That's just my point, because they don't work. People buy. I inherit so many traders from those penny stock and cheap stock places. People say they lose money and they get their accounts blown up and they get frustrated and all that kind of stuff. And I inherit a lot of those competitors' traders because people want to say things like, there's got to be a better way. And there is. It's just trade good strong charts with good wide trading ranges like any intelligent trader does. Speaking of which, Bristol Myers, I said to go short at 54.7. Winner, winner, chicken dinner. That's yet another win. Cover it all out now. Near 40-cent profit. I said to go short up here. If you guys got it, cover it all out now, because that looks like a pivot to me. I don't know about y'all, but I see a couple of green candles, so let's take the money and run. Another epic journey here, exclusively at tradingtheopen.com. Since 1999, Day Trading University, the world's best place to learn how to day trade the markets with things that actually run, not these crappy $3 stocks like these moron kids are out there hawking. What else do we got going on? YY ran up. We did have a stop. I'll call that one a stop because we tried 49.7. It tried to run up a little, but it stalled and pulled back. So I would still rebuy the high if it breaks over 49.7. The 48.80 first long was a nice big epic win for us. So that one did more than better on the rollover second one. So we're 1 for 2 in YY. And again, that's the only stop I got was from a chart posted, not by me, but one of my traders. But at least we did get a good initial big run out of it. So I find that happens more often than not. If there is a stop, it's almost always in a chart that I didn't bring to the room, but it is what it is. Anyway, so Kate's up here. Kate's trying to get up to new highs. 22 is the whole number resistance. 21.20 is the short call. That hasn't hit. And 22.3 is a long call. That also has not hit. So we're kind of on the fence waiting for Kate to decide what she wants to do. In the meantime, stop the madness. We'll see where things head from here. Molina Healthcare 50.4. If you took that short, congratulations. You are now almost 60 cents in the money. Cover out half now. Put a cover stop where? I said to go short at the 50. Remember, it was back here and I said go short if you get under 50.4. Anyway, that one ran nicely. That's a bullish engulfing. That would have been an exit sign if it took out new highs here. With that configuration, let's cover it all out if it gets to where? We're for 49.80 in the tape. Let's use 49.90. Let's play it super tight. So lock in a 50-cent profit. If it gets over 50.4, I want you to cover out the short. I had you go short of 50.4. We're currently at 49.8 by 81 on the inside market. If we get over 49.90, cover out the open short. Oh, thanks, Jose. Yeah, right. Most short flawless. And thanks, Steve, the heads up on the Tiva short. We'll take a look, too. Tiva's trying to head down. We'll see if it keeps going. At 35.90 hit, but it hasn't continued. So we'll see. It's trying to pivot back up. Anyway, the MOH short working out nicely for you guys. 50.4 is our short call. It's currently down at 49.76, which is cool. Let's put a cover stop now, 49.80. Let's trail a 10-cent nearest Cover stop. Let's look at our tape. We always use tape reading here at Trading the Open. I'm the original guy. You might want to see my article, The Tale of the Tape, from Active Trader magazine from over a decade ago. I was the first guy to teach tape reading out there, other than Jesse Livermore and Reminiscences of a Stock Operator, great classic book, but I'm the first modern guy to teach tape reading. A lot of people have since tried to copy me, but anyway, in our tape for the exit, let's use a 49.7 cover exit. So if it bounces over 49.7, I want you to lock in the profit. That's a 70-cent win for you guys here exclusively at Trading the Open. If it bounces over 49.7, we cover the short, which is right here. Let me walk you through the exit on this one. So I said to go short at 50.4. That's almost a point in the money now, right? We're 49.50, so it's 90-cent win. Boom. Look at that. What a boss. What a champ. You guys are great for being here. I wanted to thank y'all here. I don't take it lightly that all of you are here. We got such a big turnout here of members at Trading the Open. I appreciate all of you joining and being here. Kick the market's rear, right? Take no prisoners. We're crushing it today. Unlike people that are amateurs that try and say one $3 stock and I traded 5,000 shares and I'm up $8,000. No, that's a bunch of hogwash. What you want to do is trade things like this. Anyway, that's a professional's approach. Ask any professional day trader. They'll say, no, you don't touch small caps and low float crap and penny stocks. No professional traders do that, or very few, I should say. The majority of us who are pros like things like this, where you got some volatility, both on the upside and the downside, right? Multi-point moves are the right way to trade. Let's put a cover stop at 49.50 on this guy. Okay, let me walk you through the exit. We're getting close to the 49 whole numbers, so for that reason, we anticipate a reversal any second now. And as you're following with the eyes on the tape like a hawk, you want to get out at the first sign of a bounce up because we're short from 50.4. That's over 1 point win. Put a cover stop at 49.50 on this guy. If it bounces over 49.50, cover out the short. I think it's going to bounce. New traders, cover out all open short now. Cover out your short, take your money and run. Experienced traders, use 49.50 as a cover stop, which may well tag any second now. 49.45 by 48 on the inside, 44 by 43. Still continues on down, but we want to exit our short and lock in a nearly 1 point win if it gets over 49.50. I called the short of 50.4. We're now at 49.30. It's over a 1 point win. Now, put a cover stop at 49.40. Take that point. That's a boss day trade, right? 1 point winner on a $40 stock. Huge. And the bounces to the upside, also nice big winners earlier. Anyway, cover it all out now because we're over the 40 in the tape. See those 41s by 44s? So now's a good time to cover out the open short in Molina Healthcare. I called this short for you guys correctly at 50.4. We book a profit at 49.4, and our work here is done. Game over. And that's what you do to day trade the markets. I will be posting this video on YouTube for all of you watching this. The thousands of you around the world, compare my performance with anybody in the world that runs a live trading room. That's why I've been the choice of thousands since the late 90s. Exclusively at www.tradingtheopen.com. If you're not yet a member, I look forward to seeing you in the room as a member. Try it out for a month and see if you can follow along with these kind of alerts. We're not 100%, but we're pretty damn close. And the reason is I trade strong charts with tight stops, break-even stops wherever possible, and the strongest high velocity, high momentum charts, usually in the $20 to $40, $50 share range. So we've got a good shot of making this thing work.